The most important stock market event from now until Christmas is undoubtedly the Nvidia earnings. And it's likely to be another record-breaking quarter. And at the same time, Nvidia is apparently in talks with Elon Musk's XAI to invest in it, which would value XAI at $75 billion. In the next couple of minutes, I'm going to walk you through the numbers. Yes, this will be number heavy. If you don't like numbers, go somewhere else. And I'll break down for you what Nvidia needs to deliver, what to watch out for, what the risks are, how we trade it. I'll also show you on the chart the crucial resistance lines and how you can see that it works and get your pause on that for free as well. Now, if you are really short of time, the Nvidia's Q3 earnings here will reveal whether they can maintain their insane margins, 75% gross margins, which is extraordinary, and how they see the future beyond Blackwell. Now, in my former banking days, I went through quite a few earnings reports. I've never seen anything like what Nvidia keeps reporting quarter after quarter. They are staggering, unique, insane numbers. But there is a bigger story to it. If you look at the XAI investment, we're looking at vertical integration, right? Powering AI infrastructure to potentially owning stakes in the AI applications that are the biggest customers of Nvidia. And if you just want to know, is this going to go up or down? Will there be a massive rally? I'm with you. I sympathize. We'll look at the stock chart towards the end of this video. But if you want to actually learn how to spot those breakouts, and yes, you could have spotted the Nvidia breakout below $100 easily. All you need to know is 4 rules. They're pretty easy to implement. You can get all the data for free. In fact, you can learn it for free because I made a 30-minute masterclass for you. Like literally, you can play that right now. Well, probably after this video because you're not going to want to miss the insight that's undoubtedly going to pour out of me over the next few minutes. But if you head over to felixprehn.org/get free, because I want you to get free from your wage slavery or whatever is keeping you down. You could be a complete beginner. Maybe you think stock charts are gobbledygook and all of that. That's completely cool because I came from that same place. Watch that masterclass today at felixprehn.org/get free, and you will never look at a stock chart quite the same way again. And a lot of you guys are telling me you're getting huge value out of that, which is precisely why I made it. But the Nvidia earnings are going to go beyond Nvidia. It's going to affect the whole AI landscape. But let's talk numbers first. The bottom line here is Nvidia needs to prove it can maintain extraordinary momentum. They brought in $26 billion in data center revenue last quarter. And they need to show that their insane sequential growth will take that to at least 30 billion to keep that growth narrative intact. Is it likely? I'd say so. Look, Microsoft's already bringing in $10 billion from selling AI services. Amazon just committed to spending $75 billion on AI infrastructure. So the Nvidia story could just be at the beginning. And do you remember the earnings results from Google and Amazon and Meta and Microsoft? What did Wall Street not like about most of those? That they're spending too much money on AI chips. So given that those guys make up something like 40–50% of Nvidia's revenue, I think we have a pretty good indication here that Nvidia is likely to knock it out of the park again. And then we have the Blackwell chip, the new chip, and that's always going to be a cycle. So it is likely to exceed the H100's success. And then, of course, the question is what comes after that, and we touch upon that in a moment as well. But the market is looking at the whole cloud guys as risk now. If half your customers are like 4 people, well, what if they stop buying? What if they develop their own chips, which they are? Could be very risky. So we're going to want to see that broaden out, and we're seeing that. They're enterprise direct sales to OEM partners who are basically buying quite as much, but accelerating. So we want to see the pharma customers. We want to see other tech companies roll this out. We want to see governments build those government-run AI computers, while at the same time, I expect the magnificent 4 or 5 or 6 or 7 to continue spending like it's going out of business on Nvidia chips. Now, if you're wondering how in the heck does a hardware company, GPU manufacturer, come up with 75% gross margins, which are the sort of margins you normally only see in software? Well, they have this partnership with TSMC. TSMC has got a new facility, relatively new, in Arizona, And that is now showing yields that are exceeding what they're doing in Taiwan, which of course is music to the ears of US government officials, but also it creates less risk for Nvidia because now they can manufacture those in the US. If you think tariffs and all that stuff potentially coming up, this could actually be very, very good news for them. So Nvidia isn't just creating short-term profits. They're actually building, in my opinion, a sustainable competitive advantage. Their products are getting so much more efficient with each new product, from the Hopper to the Blackwell and the next chips coming up. It offsets any pricing pressures because nobody seems to be able to catch up with them. So it creates this virtuous cycle that's insanely hard for competitors to break. Let's say they get all that right? The market is going to really care about, yes, they need to beat, they need to be big, they need to really demonstrate that they're growing faster than everybody thinks. And then they're going to need to give us guidance. So in expectation of the next quarter and the next year, that is again bigger than the market expects. It's a permanent game of needing to beat expectations. At the moment, the market is pricing in a 99% year-over-year growth in profit per share and an 80% increase in revenue. Those are pretty high metrics, and that's the only reason I would ever possibly be cautious on this, although I think the story has just begun. So watch out for Blackwell revenue projections very carefully. They mentioned several $1 billion for Q4, but we're obviously going to get some specific numbers. And into the next quarter, what's the ramp up going to look like? Will it be 20 billion? Will it be 25 billion? Will it be, what's the number going to be? And then if you look properly into 2025, you're going to want to see what are those big customers committing to? How long are those purchase agreements? How many GPUs have they committed to, and what does the pricing look like? And then how much of that order book can they actually fulfill? Because when Microsoft says to you, we can't get enough GPUs, there probably is a shortage because those guys have got more money than God. And then there is the Blackwell to Rubin timeline, which means this is a whole nother game. And the same thing happens again. Everybody who bought the Blackwell chips is going to have to replace them with the Rubin chips because they're that much faster and they're that much more energy efficient, which means if you don't have them, well, your cloud computing is going to be too expensive and everybody's going to go to Bezos's little cloud computing hub or wherever. So what do I think in a nutshell? I think the competition is so far behind, they don't even know what the heck they're doing. AMD, Intel, they're all just trying to figure out what to do with themselves. Nvidia has a insane sustainable moat. That moat looks as follows. It's an innovation moat. There is this ecosystem. Every AI developer out there writes basically in Nvidia language. And that ecosystem is hard to break through. They are the market leader, which just means, well, it's a lot easier to be the market leader and to get out your new product when your customers are already spending 95% of their money on you. And nobody generates as much cash flow as them. Nobody has margins like them. And by nobody, I mean the Intels and the AMDs. So they are just better on every single metric, which is just bonkers. So on that note, let's look at the stock chart here. I've got a simplified stock chart open here in Trade Vision, and the way that works is when it says green, our indicator says buy. When it says red, our indicator says sell. Is it 100% accurate? No, it's an indicator. If it was 100% accurate, the stock market would close and algo funds would be making trillions of dollars, and they're not. But it is very, very useful. So we called a buy here at $132, and right now we're sort of lingering, right? What's the problem with the lingering? Well, if you click on the more advanced chart up here in the top right, I'll show you two real bits of insight. So you've got the buy signal here in green. I'm just going to take that off. And then you see these support and resistance lines. And they're at 140 right now, the resistance. And guess where we closed yesterday as of me recording this? Well, at 140, we didn't break through it. If you change to, say, a 5-minute chart, I can really explain to you how that resistance actually works. So this was yesterday. And do you see how we again and again hit that resistance line, like here and here and there and here and there? What happens when you do that? Well, market makers sell. And you can see that again and again, right? They just sell, they push a stock down. And they'll keep doing that until you get such a massive breakthrough that you overwhelm their selling. And that's very useful information because you now know that was a big resistance line before that day happened. And therefore, when you saw that rally up, which was, very nice rally up here, you probably thought, well, we just hit 140. It might be time to set a tight stop loss. Maybe we just take some profits, put our money somewhere else, because all day long, absolutely bugger all happened. So that's one very, very useful data point you can get here from Trade Vision. There's a 3 weeks, you can get a trial for a week. It doesn't cost you anything. Just cancel at the end of the week if you don't like it. And then secondly, we also have dark pool data in here. We call it smart money trades. We say that with a bit of a sense of humor, really. And I'm just looking at the big trades here, and it shows you that here in the last couple of 7 hours. I'm recording this after the market's open, but it'll show you trades from the last couple of minutes even. And if you look at the big ones, and overall they're pretty bearish, right? A lot of them are bearish, and that will be partially profit taking and partially hedging. There is the occasional bullish trade here, 1.3 million, buying a call option at $150. There's another one at $85, but not many, right? So you can see the market's a little cautious. And there's nothing wrong with being cautious, though I think Nvidia at basically an all-time high is a better buy than not on an all-time high because all-time highs tend to go higher. Now, how would you have spotted the breakout below $100, right? Because I said you could have done that. Well, there were a few opportunities. The most recent one here, this was quite a nice one. In May 2024, we're trading at $94. What happens? We gap up. We have big volume down here. We're above the 50-day moving average line, big signal. And then we gap up again, another big signal. And then we go all the way up to $140, and then we came down a little bit. So what would you have done if you'd watched my masterclass? Well, you would have bought basically here, and then you would have exited, and I'm going to show you why. You would have drawn a trend line up, and as you drop below that trend line, you would have at least taken partial profits. Maybe you would have stayed in the trade for a bit longer, but a bit more. It would have gone back up here, and then again, you would have exited probably your next position here. So you would have made money all around. Do we make money on every single trade? No. If that's your intention, please don't trade, because you will never make money on every trade. But in the long run, we can make some pretty sweet returns. And it's a heck of a lot easier if you A, know how to spot those breakouts, and B, stop being a bag holder when stuff actually comes down. So play with Trade Vision here for the data and watch that masterclass. It's completely free. And just a few words on the XAI investment. I think it's an interesting route that they're taking. So they got so much cash, right? They're thinking, well, we could just buy our own shares back, which is what they're doing. Or we could just invest in lots of the AI customer chain, which means if one of your biggest investors is your supplier, you're very likely to keep buying their product, which is quite useful. It might create some regulatory problems down the road. I think that's definitely something to look at if you own a big stake in all of your customers. But it also shows that they're thinking, well, XAI is doing something so extraordinary, we might be able to become more like a development partner, as in actually learn from the stuff that they're doing over there, because Elon's genius is very unique, and that might allow them to put up better products. It's a little bit like, when Palantir invested in lots of these SPACs, these early stage companies, and everyone's like, that's a waste of money. And Palantir said, no, you don't get it. We're not doing this actually for profit. We're doing this to understand those businesses, because these are very smart founders that help us understand that business. And say they're building an eVTOL or something, that business is probably going to go out of business, very likely as a startup. But we can then take that information and we can go to Boeing and say, guys, we understand your industry better than anybody. Give us $10 million. So I think that's kind of the Nvidia approach here. So am I liking it? Honestly, every quarter I like it a bit more. That's kind of it. So I hope you got some value out of this. If you have, share it with a friend or a golden retriever. And I wish you all the best. Palantir just knocked it out of the park. They absolutely crushed Q3 earnings. A 54% commercial revenue growth. Take that, Wall Street analysts, marking their 8th consecutive profitable quarter.
Our results are exceptionally strong. Revenue grew 30% year over year in Q3, driven by an intensifying AI revolution that the US is rapidly driving.
And for those of you short on time, here is the essence. Palantir has achieved $1 billion in trailing 12-month free cash flow for the first time, while their AI platform adoption has accelerated beyond all expectations. People are